Hello, everyone, and I hope that you're well. I hope that you've had a good long weekend, a good Easter as well. I didn't plan on doing a weekly outlook, but some of you from the mentorship and the course program have been sending me higher time frame markups because I haven't done it, and you're sending markups that don't really make sense, which tells me two things. It's either that the content isn't clear or it's purely the fact that you haven't practiced enough, which is fine. It's not an issue, but I think especially when you're marking out POIs in terms of higher time frames, with how strict the rule set is, there shouldn't really be a need for verification, as in from myself, which is the whole point. It's meant to be as simple and easy as possible, and I think what happens, especially if you're coming from a different course, for example, because I know our rules in general is unique anyway, but it's a different way of seeing it, which is not, it's not easy to pick up. But it's what you should be doing is if you're still practicing and I'm trying to understand how to mark your structure, then I suggest giving yourself enough time to make sure you understand it before you start marking up POIs and looking for trades, because if your structure is wrong and if your POIs are wrong, then everything else is going to be wrong in between. So there's no point even looking for a trade. All you're doing is just putting yourself into more trouble, I'd say, than it's worth. Um, but anyway, I'll walk through the higher time frame plays and then we'll go from there. So on EU, especially from last week, we don't really have. Well, not last week. Yeah, even last week, even from last time, price hasn't really. I mean, all we had was this big bullish push. And in terms of the reaction point that we spoke about last time was the retrace from somewhere about here. I think it was this one that we spoke about. Yeah, it was this one that we spoke about in terms of where price is efficient. We don't have any reason for price to go lower. So in terms of where the OB is, for example, let me make sure I'm talking about the right pair. Yeah, I am, because sorry, we have the low here, we have the structural high here. So this gets taken. Now in terms of the OB, by definition, it's this candle here, right? So this is the sell move before the up move. Now the thing is, in terms of refinement, a lot of us will try to look for the extreme, but the thing is, when you refine it to this one, for example, you think about there's no imbalance there, so there's no reason for price to really go there. Use imbalance as a reference point in terms of, not reference point, as a good indicator whether the OB or POY is clear or not. This is why I always say go for the one that is closer to the imbalance, but it's still a valid refinement of the OB. Sometimes it could be the fact the OB, that this candle could be all the way down here, but the pricing is so efficient until it gets to that breaker structure where it's so far away from the structural range low. Now the thing is, if price was to, for example, come here and then take out this low, it doesn't mean that this whole trade setup is invalid. It just means that this POI was not correct. There's probably a lower time frame refinement within that, which makes sense because the range low, it's still, in this case, is still down here. The range is still from here to here, right? We're looking to trade anywhere between this range from below 50% to the high. Now I said 50% because a premium discount is not something that we necessarily do, but in terms of, I think that's the best way to sort of explain. A lot of you know what the premium discount is. It's probably the best way to explain where we look for the trade. But the best thing to, especially when you're marking out structure. So when you mark out structure, the first thing to do actually when you're marking out your POIs, try and make it as simple as possible. So let's talk about the fresh range that's happened. So the fresh range that we have, because this is a breaker structure, we've got this high. Now we go back and try and find the low. The low in this case is here. Now we're trying to find a POI somewhere within this. Okay, we don't have to do any refinement, nothing like that. We're just thinking to look for a POI within here. Now the first thing that we do is look at the extreme. So we start from here and then we work upwards. Keep this as simple as possible. Now the first thing that we have in terms of when price breaks, we have this candle here, but do we have any imbalance? We do, but it's already been made efficient. Now the thing is here, right, in terms of where price was made efficient and then we still had that breaker structure. So what this tells us, if we were to look at it like this, so we have that somewhat impulsive break. This is the wick where price made pricing efficient because this is what cleared the imbalance. Not only that, if you think about it even in simpler terms, this is where you got selling pressure before the buy move. So in terms of where, and it's obviously easy for me to say now that I've seen where price sort of is reacting from, but in terms of the logic behind it, think about what's actually happening within this wick is the fact that you've got, this is where the sellers, this is where the sellers get exhausted and the buyers are entering in the market at that point. So this is telling you there's buying, ouch. This is telling, sorry, this is telling you there's buying pressure within this wick that led to this break. So this is without even going to the lower time frame. You can just do the refinement just from there and then. But that's as simple as you need to make it. And all you're trying to do is trade from wherever this POI is to that range high. That's it. Doesn't matter what time frame you are, doesn't matter what model you're trading. This is the exact same way that you'll do it in every single time frame, every single model, regardless. It doesn't matter. That should be as how simple it is, which is why I don't put too much emphasis on. It's why I stopped putting too much emphasis on the weekly outlooks. As I said, I didn't plan on doing this one, but I felt after what I saw, I was a little bit disappointed, especially what some of you are marking out. It shouldn't really be that difficult, but I understand why it is difficult for some of you, because some of you are moving on from different courses and trying to combine the two. If you're gonna join, if you join Vertex, commit to it completely. Otherwise, it's not gonna work. You can't just pick and choose concepts to that extreme. I mean, if you can make it work, you can make it work, but it takes quite a high level to be able to do that. But if you're still in that beginning stage or trying to in that testing or progressing stage, for example, you want to commit to something completely and give it enough time to play out. You can't just rush into it. Another thing I should mention, okay, so actually, before I go on, so this is obviously a valid POI. In this case, I'm aiming to take out that daily high. That's it for the higher time frame. Simple as that. Now, in terms of this marking out, as I said, it's the exact same process that you'll do on every single time frame. Obviously, we'll do it for the other pairs and we'll go on from there. Before I go on, another thing I want to mention is that some of you are doing this where you have, for example, break or structure. This doesn't work actually, hold on. Where you have like this, okay? Now, say this is obviously a bad representation, I suppose. Say you've got this breaker structure here, okay? The range low is here. Imagine there's no range low here. It's just sideways candles. You don't have any low breaks to say that there's a low there. However, some of you are marking this as a POI when you've got a clear OB underneath. The question is why? It doesn't make sense, because in terms of the way that we see things is that we should be sticking to starting off where the extreme is and then working our way up. If it was the case where price is efficient, where we have wicks down here and there's no clear OB, then all we have is here, then that makes sense. That's fine. I think the reason why some of you do this is because sometimes you see you mark it out and sometimes you see price react to it and continue, or sometimes you see price go to the extreme and then continue. Then you're sort of stuck. You're thinking, oh, what do I do? Now, the thing is, if it's the case where you're scared or that price is going to react from here and then leave without you, if it's the case, what you do is simply mark it out. It's fine. It's not an issue. However, bear in mind, it's not meeting the rules, but you can force it to meet the rules to an extent. You can make the rules fit around what you're trying to do. Obviously, you can't force it to that extent, but I'm just trying to give you an idea what you can do if you can't sit still, basically. So if it's the case where prices come into this POI, all you have to do is go to another time. Say this is your daily. Just go to like H4 or even the 1 hour. Doesn't even look like H4 or 1 hour. Hold on a sec. There you go. H4 or the 1 hour. And you can see if there is a structural low that led to the break. If that is the case, then yes, that fits the rules. And that gives you a reason to look for a trade within that. However, if it's on the time frame that you're looking at and you see that there's no low there, for example, you still got an OB at the extreme, don't mark it. Don't get in that habit of doing that. But if you really cannot sit still and hold yourself and stay disciplined, then go to use this method of going to different time frames and try and find a reason why. You can always find a reason why for every single move. It's not saying that you can catch every single move, but you can always find a reason why certain moves have happened using the rule sets. And what I suggest doing is just observing. Spend some time observing rather than trying to trade. You don't have to trade straight away, especially if you're learning. You're not exactly going to make anything. As in, that sounded quite harsh. I see. You're not. Is that if you're learning, right? You're not going to be expected to make a solid return anyway. So don't force yourself. Learn from observation and then get the confidence to go forward. We'll move on to GU rather than me waffling. So same thing. Let's mark out the range that we have now. So we have this range high from this that low. No, the range low is here. We start off at the extreme, work our way up. No imbalance, no imbalance until we get to here. So all we have is this candle here. So now we've got this POI and we can aim to take out that high. Simple as that. You can move on. Again, same process every single time frame. As long as you have your structure rules correct, you should be able to do the rest correct. You just work upwards. Hopefully we get a bearish one. I hope we do. Then it'll be better. But we'll see. So again, we've got this range low. Is that high? Yes. Did that break? Yes. Okay. So now, I didn't mean to go that far back. I don't know what happened there. Okay, so we got this range high, and we're trying to find where the range low is, which is here. Okay, so we're starting off from the extreme, and we're working our way up. Now, in this case, the only part of imbalance we have is here. Obviously, before this candle was printed, and then we have this wick here. Now, if this is the case, right, so price is invalidated, obviously, this wick, which you probably could have marked out as a POI, which is fine. This trade, that doesn't mean the range is invalid. It's still a bullish intent. Bear in mind this is only bullish intent. It's not two rules, so it doesn't confirm our change in trend. But what we're trying to say is that if price was to wick below, we still have a reason to buy. It just means that there's more of a refinement on lower time frame within here. Now, if it was me, for example, before I even saw this, I would mark this out without hesitation. Now, if price was to come below, I wouldn't necessarily worry unless, not necessarily worry, even if it breaks that, I wouldn't worry. It's more the fact that it changes my opinion. Now that it's wicked below, it's not a huge issue. You just have to see if you can make sense of it on another time frame. Now, in this case, in the 4 hour, what we had was breaking structure. I mean, it's invalidated, so it doesn't really make sense on that time frame either. So in this case, you can still look for longs within this range, but the thing is, you don't really have a reference point. If it's the case where price is wicked out, it's not exactly broken structure. It's okay to use a normal confirmation within that, because this could, all you're doing and what you need to realize you're doing is you're trading a liquidity grab, a potential liquidity grab. It's not confirmed and it is lower probability because you are trading somewhat of a reversal. Your best bet if you want to be if you want to increase your probability is go for example, what is clear to you. So in this case, all you would have is when price obviously wicked below, we had this candle and this OB here. And obviously with that refinement being the wick trick, we could have obviously just traded that and traded the bearish range to take out this 4 hour low. To keep it simple, and this is our pro trend, is even on the higher time frame, this is pro trend because our higher time frame is bearish. This bullish intent is only intent, it's not confirmation. So go with what you feel comfortable doing. In terms of going pro trend and counter trend, if you're still struggling to take trades on general, go stick with pro trend because you need to increase that probability before you start doing anything big like trading reversals. Reversals aren't easy. They just take a long time they just take a while for you to get used to, and you need to have an element of you need to get rid of the element of fear because you can't be scared. It's like you should be trusting the rules, trusting the edge that you have at hand. Next we have is GJ. Okay, so GJ, what do we have? High, low. Then this was broken and we created low confirmed there. Where's the high then? There's the high. So the high is this wick which broke. Okay, so then the next range we have is okay. So what we have is from this range high to this range low. In terms of POI, we stick with the extremes. This is the case where this extreme has already been mitigated to an extent. So all we have is this. And we just wait for that. If price, this is where some of you get FOMO. You see this, you see price breaking up now and you're thinking, oh, why is it doing that? It's not coming back to the POI. It's fine. It's not an issue. But if you really cannot wait, go to a lower time frame. If you see some sort of reaction, try to make sense of it. Even in this case, it doesn't even make sense in this case. Let's go hourly. Even that doesn't make sense. I mean, if it's the case where you're seeing some sort of reaction and then you see this hourly break, for example, so you got this range low, this range high, which broke. Obviously now you see this POI here where prices reacted from. Easy to again, easy for me to say now because it's in hindsight, which is another reason why I don't do the end of day markups or whatever some of you guys ask for, because I know a lot of groups do it. But I find it a little bit ridiculous, to be honest, because it doesn't really make too much sense to me. But because it's easy to mark everything out in hindsight, but if you really can't sit and wait for your POIs, you could still make same reasoning. I wouldn't go below the hourly though, in order to mark out what you're doing. But apart from that, I mean, we're not doing anything else. We just have to wait to see what price does in this case on GJ. Okay, so next, this is the last, this is from a few weeks ago. This is the POI that we had marked where price obviously reacting from. So this hasn't really changed. And as I said, price hasn't really changed to the last one anyway. But we're aiming to take out this, sorry, not that low. We're aiming to take out this low here, which we can still continue doing. So I guess that bias doesn't really necessarily change, to be fair. But yeah, anyway, I hope this outlook has given you a better idea of what you should be doing. Just remember, keep it as simple as possible. There's no need to complicate anything that you are doing, right? Everything should be a simple process for you. Anyway, I've spoken enough, I suppose. I will leave you all be. Actually, I need to mention, I don't know if any of you in the course program and the access program has saw the announcement that James put out. So the mentorship call that we did Sunday, sorry. I thought today's Monday. We were showcasing the new model that we're testing. Now, the new model is not... Don't get distracted by thinking that it's a shiny model. It's a shiny thing that it's going to change everything for you. It's going to improve your trading for the better, because it's not necessarily the case. We still are testing it. The reason why we did that mentorship call is part of their package anyway. But the reason why we demonstrated is because it's not because of the model. It's because we wanted to give an insight into how much effort and work goes into developing the rules that we have. Because before I started SMC, I was always trading mechanical anyway, and then when I moved over to trading with SMC concept, there was no mechanical based SMC concept to that extent anywhere. And this is something obviously that I devised. I spent a lot of time to get to this stage in terms of having such clear and simple rules. And all that call was doing was demonstrating how much work goes into it and how much you should be doing as a student, and what's expected as you, not what's expected from you. And that's not from my expectation of me, as in that's not my expectation of you. It should be the expectation of yourself. It's not me you're trading for. At the end of the day, you're trading for yourself. It's not for me. I can only guide and tell you so much. It's I can't exactly change your lives, I suppose. I can only influence your decisions, but I cannot change everything for you. That's all. Don't feel like you're missing out on anything, because you're not. If the model is complete, it will be posted anyway, but it's just not. It's we just demonstrated what the testing showed. Anyway, I hope you all take care, trade safe, and I will speak to you all, you guys in the course program and the mentorship in the Discord. As always, stick to the plan and trade safe.